Well done on the numbers. I think the market's responding nicely. We're up 5%. The dividend, the credit losses and the cost cuts are the alpha. To the dividend, Ewen, a conservative dividend is what you say you will pay. That final decision will be in 2021. Will that be in cash? Will that be a scrip? And what size can the market reasonably expect? Good morning.
Good morning. So, well, conservative means what it says on the tin, Manor, so it will be conservative. I think we are pleased, though, and relative to what we've seen in this quarter, we think we have seen a real stabilisation in credit costs and the credit outlook. We think we've had another very strong beat in our core Tier 1 ratio, now up to 15.6%. We will make an evaluation, I think, at the back end of this year, early next year, on the economic outlook. We're obviously got to engage with our regulators in due course, but I do think the market should expect us to start very conservatively. The outlook for 2021 is still uncertain, so we want to retain some buffer for that uncertainty and then look to build off a conservative position from there.
And just how much excess capital do you have if the PRA allow you to pay? We are building a buffer of excess capital. I think we're always going to be conservative on the building of buffers, particularly in this environment. We pride ourselves on having a very strong balance sheet. We have a degree of excess capital today that we're very comfortable with, but don't expect us to normalise that at full-year results because, as I said, we still think 2021 carries an elevated amount of risk. Let's talk about the credit losses. They've obviously improved $785 million, way below the estimate, and you're guiding in the range of 8 to 13. Where have the biggest improvements in that credit outlook come from? And will you be to the lower end of that range, Ewen, closer to 8 than the 13?
Well, the big shift between the first half of this year and into the third quarter was in the first half of the year, all the way through second quarter results. We saw a fairly steady deterioration in the outlook for the global economy for 2020 and 21, with consensus continuing to shift down. I think what we've seen this quarter is a bottoming in those expectations, which means that we haven't seen the big provisioning uplift that you would see under IFRS 9 for forward economic guidance change. So I do think this quarter was unusually low. We had a higher level of write-backs than we would normally see, but we do think that we'll be towards the bottom end of the range. I don't think that gets you to the very bottom of the range, Manus, but towards the bottom end.
Ewen, you've given us a new number, and I'd like some clarity on it. This $6 billion of costs that you refer to, of course, the number I had was $4.5 billion of cost cuts. So is this the new target on cost cuts, Ewen? And are you going to have to go faster and be more radical in the cost cuts? And where are they going to hit?
Yeah, so we announced in February that we were planning to cut $4.5 billion of cost out of the business through 2020, through 2022. We said it was going to cost us $6 billion of restructuring charges to achieve that. I think what we're signalling is that we now expect to exceed the $4.5 billion over that period. We're making good progress against that.
By how much, Ewen? By how much?
Well, we're ambitious in what we'd like to be able to achieve. I think what we are seeing as a result of COVID is changed customer behaviour. So we're seeing far higher levels of digital engagement than what we saw pre-COVID in some places. That will allow us, I think, to be more assertive about reducing some of the physical distribution costs we've got. And also, we've had most of our employee base working from home. And I think when we restart work, we are thinking very hard about how do we change that model to more of a hybrid model so people can spend more time at home, some time in the office, and also a model that uses video technology and doesn't require us to fly so much.
What percentage do you think ultimately will work from home if you get the model right?
Yeah, I would like to think that the balance we could get to is, 2 or 3 days a week at home, 2 or 3 days a week in the office. That will obviously vary significantly across the businesses. If you're in the markets operation, obviously in the office. If you're in the branches, you need to be there in person. I think for people like me and my team in finance, much less need to be in the office day in, day out.
Ewen, can I push you again on the costs? You said it's going to be more than $4.5 billion. I'm trying to get a sense of how much faster you and Noel are going to go. You guided us 35,000 jobs over 3 years. Your new cost targets, people are talking about those to me on the IB at the moment. What is realistic? Is it still 35,000 jobs? Do you think it's going to be more? And are you going to have to be more aggressive on the timeline with that?
Look, we're not focused on an absolute job cut number. What we are focused on is an absolute cost number and getting the cost down as far and as fast as we can. We do think with technology, there's enormous opportunity to do that, given some of the exponential benefits you get, whether that be in frontline distribution through mobile, whether it's through the back office and automation. Inevitably, there will be job cuts associated with that. And when we're in a position to talk about it, we'll talk internally before we go externally.
You have guided us that you will exceed the $100 billion of risk-weighted asset reduction. Of course, this is the holy grail when it comes to restructuring. Where are those extra cuts going to come from? Which geography and business line?
Well, look, firstly, I'd say the team's done a great job this year in the progress that it's made. They've achieved over 40% of the 3-year target, over $40 billion of RWA reduction. We think we'll be halfway through by the end of this year. We think we're going to exceed the $100 billion target now within the $1.2 billion of costs that we said. Where do we think that's going to impact? I would say 3 areas. The non-ring-fence bank, and our US operation, and global banking and markets in particular.
Next week is the US election. There is a risk, I know it's a blue consensus is the consensus, but there's a risk of a Trump victory. That could be troublesome for you in terms of dollar funding, in terms of the tensions between the US and China. Have you had, and can you assure the market you are off the unreliable entity risk list? Is that a message you can give to the market this morning?
Look, we're not going to speculate on whether we're on or not on a list here. It's not for us to decide. We are, I think, managing the business well through the current geopolitical risk we face. I think by far, though, the biggest risk that we are facing at the moment is the impact of COVID-19 and the shift in the global interest rate environment to a near zero interest rate environment that we expect to be persistent over the next 2 to 3 years.
You flagged Brexit as a demonstrable risk. You flagged it the last time we spoke. If there is a trade deal, does your outlook for the UK change?
No, I think in the guidance that we're giving today on being towards the lower end of the $8 to $13 billion ECL range for the full year, that would bump up if we saw no deal Brexit, but the current guidance is based on a trade deal being reached in the coming weeks.
Just very quickly, the other major issue was, of course, the ICIJ report in terms of $2 trillion worth of transactions, suspicious activity. What I want to get a sense of is how much are you going to have to spend on control and systems, Ewen? Is it $1 billion? Is it $2 billion? How much more do you need to spend?
Well, firstly, in relation to the ICIJ allegations, they predated us concluding with the US on the deferred prosecution agreement. We have and do continue to spend hundreds of billions of dollars a year on ensuring that we've got as good a KYC and money laundering controls in the bank as we can have.